What's up, everybody? Welcome back to the channel. It's the first week of March, which means the Greater Vancouver Realtors have just dropped the February 2026 stats. And quite frankly, there's a lot to unpack here. Now, I'm going to be doing this video in a massive market update with realtors in Canada and the United States. Make sure to check out their link in the description down below. So let's dive into it. Sales are down, listings are down too, and prices are sliding year over year. But yet somehow the market is starting to look somewhat stable. I know that sounds weird, but stick with me here, because once you see all the numbers together, you're going to understand it. Whether you're buying, selling, or just watching from the sidelines, this one is definitely worth your time. Let's get into it. Total residential sales in Metro Vancouver came in at 1,648 homes sold in February 2026. If we compare that to February 2025, that's a 9.8% drop year over year. And compared to the 10-year seasonal average of about 2,310 sales, we're running nearly 29% below the benchmark. Now, that sounds alarming, but here's the thing. This isn't new. We've been running below average for quite a while now. Greater Vancouver chief economist Andrew Lee literally said this has become the new normal. And I think that's the right framing. The more interesting story this month is actually the supply side. There were 4,734 new listings in February. That's down 6.4% compared to last February. So sellers are pulling back. Fewer people are listing, but total active inventory is still up, sitting around 13,500 properties, and that's up 6.3% from a year ago and a whopping 37% above the 10-year seasonal average. So we have fewer buyers and more inventory than usual. The math keeps pressure on prices, which we'll get into in a second. What we need to talk about is the sales to active listing ratio. This number is the one I always pay closest attention to, because the sales to active listing ratio means basically what we're looking at in supply and demand. It tells you the temperature of the market. Right now, for all property types combined, it's sitting at 12.6%. Here's the context. Historically, when this ratio stays below 12% for a sustained period, prices tend to drop. When it pushes above 20%, prices tend to rise. Between 12 to 20% is considered a balanced market. Right now, we're at 12.6%, so we're barely in balanced territory. I'm going to break it down by type of property next. So detached homes, we're at 9%. That's definitely buyer's market territory. Detached, so condos, townhomes, townhomes, 16.6%. That's a balanced market leaning towards a seller's market. And apartments are at 14.1%. That's a balanced market. So if you're looking for a detached home, you have negotiation power right now. If you're in the apartment or townhome space, it's more of a push. Now, prices by property type. Let's talk about this. The composite benchmark price for all residential properties in Metro Vancouver is sitting at $1,100,300. That's down 6.8% from February 2025, down a minuscule 0.1% from January 2026, basically flat month over month, which is actually one of the more interesting data points in this whole report. Let's break it down. Detached homes. Benchmark is $1,835,900. That's down 8.8% year over year and down 0.8% from last month. Apartments, benchmark is $708,200. That's down 6.8% year over year, but up 0.5% from last month. Townhomes, benchmark is sitting at $1,046,100. That's down 5.6% year over year and up 0.3% from last month. So here's a pattern. Year over year, everything is down, but month over month, apartments and townhomes actually ticked up very slightly. Detached, it's still drifting lower. So if you're tracking the bottom, and who isn't, apartments and townhomes showing the earliest signs of stabilization. Detached still seems to be under more pressure than the other two. Now let's zoom in on a few specific areas, because the Metro Vancouver market is not one market. It's made up of 20 markets stitched together. Squamish continues to be the outlier on the upside. Detached benchmark is $1,769,000, up 11.1% year over year and up 4% just over 3 months. If you've been sleeping on Squamish, the market there clearly hasn't. Whistler is also showing strength. Detached is up 12.3% year over year. So these recreational resort markets are playing by their own rules. On the other end of the spectrum, Vancouver Westside is down to $2,931,000, That's down 13.7% year over year. That's a significant correction in the luxury space. New Westminster apartments are down 10.6 year over year, one of the steepest drops in the condo segment. Surrey and South Delta is worth watching for buyers. More affordable price points, and the data shows some stabilization in certain property types. For most of the core Metro Vancouver areas, Burnaby, Coquitlam, Richmond, North Van, you're looking at a year-over-year declines between 5 and 10%. Painful for recent buyers, but opportunities for people that are entering to the market now. So the $1 million question is, what is going to happen in the spring market? Is inventory going to skyrocket or sales going to stabilize? What's the active listing to sales ratio that we're going to see for the next few months? Andrew Lee from GVR put it well. He said the spring market will be the litmus test of whether we keep coasting in this new normal or if something changes. Here's my read on it. On the buyer side, conditions are about as favorable as they have been in years. You've got high inventory, motivated sellers, and prices that are meaningfully below their peak. Rate cuts have been flowing through. Borrowing is cheaper than it was 18 months ago as well. So if you've been on the fence, spring 2025 was rough. Spring 2026 is a different story. On the seller side, here's a concern. Fewer sellers came to the market this February than last year. And if that trend continues and spring demand picks up, and it typically does, you could actually see inventory tighten. That's what could put the floor under prices and potentially reverse the modest declines we've been seeing. The attached and apartment segments showing month over month gains is an early sign of that. Not a trend yet, but it's worth watching. Back to detached homes, especially at the higher end, there's still a lot of room to correct. The 9% sales to active listing ratio in that segment doesn't lie. There's way too much supply and there's not enough demand, and affordability is still incredibly low. All right, to summarize, February 2026 in Metro Vancouver, sales are down year over year, but it's the new normal. Listings actually fell too, which is a wild card heading into the spring. Prices are still lower than a year ago, and that's across the board. But month over month, the condo and townhome segments are showing early signs of stabilization, and the detached market remains in buyer's territory in your control. Whatever side of the deal you're on this spring, the data is your friend, so you better use it. If you found this video helpful, hit the like button. It genuinely helps this channel reach more people. Subscribe if you haven't already. I drop these monthly stat breakdowns every time in the Greater Vancouver market whenever they release new data. Drop a comment below if you want me to do a deeper dive on any specific area, whether that's your neighborhood or city you've been looking to buy at. I read every comment. I'm Chancey with The Real Broker. I'll see you next month.